mortgage insurance. You're thinking, what kind of insurance is that? Isn't that the insurance that covers my house in case, I don't know, a tornado rips through it? No, it's not. Mortgage insurance is for the benefit of your lender that you most likely are going to pay for. Sometimes there's other ways that that's paid for. The vast majority of the time, the borrower is the one responsible for paying for the mortgage insurance because that mitigates the risk of the lender. So if you get a larger down payment, in other words, then you're going to have more favorable terms because you have mitigated the risk yourself by putting more of your own money into the transaction. That's the way they're going to look at it. But if you can't do that, but you still got to get home, you got a family, right? They don't want to remove that opportunity from those people who potentially are higher risk.
Right.
So what they do instead is they say, hey, look, if you can't do 20% down, that's okay. We can do 10% down. You're going to pay for the mortgage insurance for us. So that is, if you foreclose on the home, then we're going to get a payout from that insurance policy that you're paying for so that we can continue to have the funds needed. That's why that's so important that you know that that's not the property insurance, because that's what you need to call that. Property insurance versus mortgage insurance. The insurance is still in there. That's why it's confusing. And it deals with homes. That's why it's also confusing. But property's got you and your needs if something unforeseen happens. Mortgage insurance, that's the lender. And in most cases, you will be paying for it. So it's an expense we have to consider.